So the market started off very red today, guys, and now, believe it or not, we're still in the red. I mean, look, all the indexes are down, but we have recovered a good amount over the past couple of hours. So in this video, we're going to break down the markets, we're going to talk about some stocks, and we're going to go over earnings reports for a couple companies. So if you guys find value, hit that like button, make sure to subscribe, get your free money down below from Webull and from Moomoo, and if you guys want 50% off your first year of Seeking Alpha Premium, that's linked down below as well. And let's just dive right into the video. Let's not waste any time, guys. So right now, SPY is down 0.4%, which, like I said, I mean, we've recovered a good amount throughout the day. A couple hours ago, SPY was at 393.50. That is, about $5 lower from where we are now. In other words, from the low of the day, SPY has rallied about 1.3%, which is a pretty significant rally intraday. And Triple Q, which you guys know tracks the NASDAQ 100, this is down 0.9% right now, and it's rallied over $4 in the past couple hours. Earlier in the day, it was at 281.18. That's the low of the day, and we're currently at almost 286. This thing has rallied 1.7%. Pretty good here throughout the course of the day. But what is not good for the bulls is the fact that if I pull the 5-day 5-minute, we took the lows out from yesterday, right? You guys see that right here? I mean, we took those out by a mile on Triple Q. The lows yesterday were about 285, and again, we hit 281 today. And we also took the lows out from the previous day. If you guys take a look Monday morning here, we in the pre-market, the low was 282 roughly, a little bit above that. You guys see it right here. We took that out. Which is not a good sign at all. Now, let me show you this. On the 5-day here, we'll stay on the 5-day. If I extend this trend line or just draw a trend line, you're going to notice on Monday and Tuesday, we held a prominent level of support, roughly was 286, 287. Now, you guys can see we're rallying towards that point on Triple Q. You guys notice that, right? So this is going to now act as a pretty big resistance, in my opinion. And as we do have about an hour, or more than that, 2.5 hours left of trading today, as we do have some time, this is going to be a point to watch. If the bulls can take this level out and close on an upswing here, close on, a good green note, right? Let's say we even go green, we break that 286, 87 level, that's going to be a very good sign in the short term, right? Especially if it starts breaking 290, but to be honest, honestly, I doubt that that's going to happen today. But overall, I'd give the advantage so far today to the Bears, no doubt about it. Even though the bulls have completely, annihilated the past couple hours of trading. Again, the Nasdaq's up almost 1.7%. The S&P's up 1.2, 1.3, whatever it is. Even though they're crushing it, we're still obviously in the red, and we're still under critical levels of resistance from just a couple days ago. Same thing here, on SPY. SPY took the lows out from yesterday, the day before. We're under a critical support level from yesterday and the day before. That's right around 290, or rather 398. We're under that point. That's going to be a big resistance. If we break 400, that'd be good for the bulls. We start taking out 402, that'd be even better, but we're just not there yet. That's just the reality of the matter. And on the 4-hour chart, guys, SPY still overall, you guys know this, it's not rocket science. It's in a downtrend. Same thing with Triple Q. Let's pull that up. You guys can see that, right? So let's see what oil's doing so far today. I actually haven't checked it in a couple days here on the channel. Yeah, I mean, it's still at $80 a barrel. Looks like we are failing, seeing some resistance here at the top of this range. You guys can see oil's been trading between, since the middle of November now, 2.5 months ago, it's been trading between $83 and $70. And, it's failing clearly to break $82, $83 again. And if it does break that at some point, from there, we might see a run all the way towards the low mid-90s, but it's not showing that sign yet. So we're not going to get too excited on the bullish side there on oil quite yet, unless, until it breaks 85, 83 to 85. Looks like the metals are doing well today as well. Gold's up 0.4%. Look at gold go, guys. I mean, this thing is up from 1618, $1,600 an ounce a couple months ago. It is now up to $19.50 an ounce. It is up 20% in the past 80 calendar days. That is very, very solid for gold there. And silver, let's pull this up. Silver just keeps on failing in the mid-20s, guys. Like I've said overall on this channel, silver has, it has to break the mid-20s. If it does, bulls could really take it for a ride and, extend the ride that they've been on. I mean, gold or silver is up from 17 an ounce a couple months ago to where it is now. It's up 40% almost. But for this to continue, mid-20s an ounce needs to break. So with that being said, guys, let's talk about some earnings. We had a couple companies report earnings this morning, including Boeing, AT&T, Abbott, we had Hess, ADP. These are a couple that we're going to break down in this video. And let's just talk about some other movers. I mean, today we have Shopify going ballistic. It's up 9.3%. Look at that big move for Shopify, completely breaking out of the ascending triangle we had drawn out. We took the highs out from a couple months ago. Now officially we broke out of that high from the beginning of December being about $45. We're at $46. We broke out. That's fantastic. And I'm not sure what the catalyst is on this. Let me see. There's got to be a catalyst. Trades are trading higher after the company announced monthly price increases for multiple plans. All right. That makes sense. That makes sense. Pricing plan is driving the stock higher. Higher price, more money coming in on the top line. And of course, depending on what they'll be profitable one day, who knows what they're going to do on the EPS side. But yeah, they're going to be bringing in more money on the top line for sure now, unless, of course, a lot of people cancel, which, I don't know if that's going to happen. But Shopify investors are loving it. The stock's loving it. It's up almost 10% right now. That is fantastic. We had Boeing report earnings this morning. Let's pull this up. Boeing is up barely, pretty much at break even. It looks like they lost $1.75 in EPS, which actually missed the 26-cent profit that was estimate. So that's a miss there. And sales also missed $19.98 billion versus $20.38 billion on Boeing. So this, it's funny how it's up. You'd think with a double miss, a stock that was up a ton heading into the report, it would be dumping on this earnings report, but it's not. The reality is it is not, and that could be attributed to the fact that Boeing has just been clobbered in general the past 3 years. If you guys look at the max chart on Boeing 3-4 years ago, this thing was almost $500. It got all the way down to $80 in the COVID crash. Now we're still down a ton from all-time highs, 50%. It's still digging itself out of the hole. So maybe a bad earnings report isn't going to send the stock down because it's already down so much from all-time highs. But I don't know. You could argue that on both sides. Either way, let's see. Anything on guidance here that might be holding the stock up? Looks like Boeing on right path to restoring operational financial strength. That's what they're focused on, right? COVID completely, and of course the 737 MAX, that whole, we're not going to get into the whole Boeing thing in this video, but that really, the fact that they had the ground of all these planes, that destroyed their business. Let's be honest. That completely destroyed their business, and now they're clawing out of the hole. They're crawling out, and it's decent. They're doing a lot better than they were a year ago, a lot better than 2 years ago. So investors are, they're not going to punish them for this. That's kind of the way I'm looking at it, as they are crawling out of that hole very slowly. Boeing at this point, if we're looking at the chart, let's pull that 3-year up. You guys know 220, 225 is a big point of resistance. This stems back all the way from October of 2021. We're talking about almost a year and a half ago, a year and a couple months ago. That's a big resistance. If we do break 225, Boeing could really start to take off even more on a technical basis from that point, at least in my opinion. But we're not there yet, so don't get too excited, guys. We also had AT&T report today. Oh my God, look at that. AT&T's up over 6%. That is pretty good. Let's see here. They did adjusted EPS of 61 cents versus 57 cents estimated on sales of $31.3 billion, which missed the $31.39 billion estimated. So they beat EPS on an adjusted basis. I'm talking a little fast today, guys. And they ended up missing on revenue, which I guess isn't the end of the world. They missed revenue by 0.09 billion. Whatever that is in millions, I don't even know, or whatever. But yeah, they missed by a little bit there, and the stock is actually, believe it or not, at multi-month highs. Look at that, guys. AT&T is now trading at, no joke, its highest level since July of 2022. That is pretty intense. So yeah, we're approaching a big level of resistance, no doubt about it. You guys can see $21, $21.50. That has been a sticking point. So I'm going to set my alert there. Mark is at or above $21.50. Let's do that now. Mark is at or above $21.50. Let's see what it does at that point moving forward. We also had Abbott today report. Let's pull this up. ABT is the ticker, which you guys can see the trend is holding nicely on this one. Uptrend's holding nicely. We've pulled back a little bit today after the earnings. Let's see exactly what these earnings are looking like. They ended up doing $1.03 in EPS, which beat the 92-cent estimate on revenue of $10.10 billion, which beat the $9.64 billion estimated. And it looks like here they issued 2023 financial guidance. And what is that guidance? If you want to know, I'm trying to find it. Let's see here. They see full year adjusted EPS of $4.30 to $4.50. The estimate was $4.41. That's good. I'm not seeing anything on revenue, but not too bad here on Abbott, guys. Let's see if we can get, maybe a bounce off 107 to about 108, 110, where it is now right around the 180 moving average. That's kind of what I'm looking at here on ABT. And if you guys have not gotten your free stocks from Moomoo yet or from Webull, use those links down below. You can get up to 15 stocks from Moomoo, each up to $2,000, and up to 12 fractional shares from Webull with any amount deposited. Use those links down below. Support the channel. Get yourself some free money. I appreciate you guys as always. Now, Hess reported this morning, an energy company here, ticker symbol HES. They ended up doing $1.78 in EPS versus the $1.65 estimate on sales of $3.05 billion versus $2.60 billion estimated. So they beat EPS, beat revenue, and of course, like a lot of other energy companies, guys, they're crushing it. I mean, they're just flat out crushing it. The stock was at $90 a couple months ago. Now it's at $160, dang near, up 2% on the day. And I'm sure it's at an all-time high because we covered this before. Yeah, I mean, look, this stock was at all-time highs in 08. Well, now it's at all-time highs, but before, in 08 was the last all-time high at 136. And then in 2014, they hit $98. And you'll notice, energy stocks, they had two peaks in 08 and in 2014. You'll see that, and you'll notice that on a lot of these energy charts. And the fact that we took those highs out by a mile is a good sign. Now, it's, this chart does look a little scary. It looks pretty overbought, I'm not going to lie, but the trend is still holding. Bulls are still in charge. We're not seeing any signs of a reversal yet, so let's see if this could, continue. And like I said, with a lot of these energy stocks, you're going to notice. Watch, I'll pop ExxonMobil. It popped in 2008. And in 2014, I'll pop up Chevron. You guys will see that. It popped in 2008, 2014 as well. And if we pull up some other ones, I mean, we're not going to do this. We're not going to pop too many up. But what's another big one? MRO. I mean, look at MRO, guys. MRO had a crazy run in 08. Holy crap. It went from $6 in 2002 all the way to almost $45 in 08, 07. Popped again in 2014. Now we're popping again. So these companies, energy companies, are still on fire. And with that being said, guys, we are about 13 minutes in. Let's wrap up the video. We're going to wrap the video up here as the markets are still in the red across the board. And we're still fighting at that 5-day, 5-minute resistance, which you guys have to watch out for in the short term here on SPY and on Triple Q. The lows from a couple days ago, yesterday and Monday, that's a resistance now on SPY and Triple Q. These are going to be big points that I'm watching for. You guys got to watch for as well. So with that being said, I'm going to wrap up the video. If you enjoyed it, hit the like button, subscribe, get all the free stocks down below, Seeking Alpha 50% off, and check out the Patreon. I appreciate you guys as always. Cheers. I'll see you in the next video. Peace out. And of course, stay safe out there. And yeah, I'll catch you guys later.